Hello and welcome to the FT. The UK government has announced it intends to resurrect long-dormant plans to issue an Islamic bond. These debt-like instruments are forged in collaboration between bankers, lawyers and Muslim clerics and structured to get around the Islamic prohibition on interest. The government hopes that by selling a so-called Sukuk bond, it will burnish its reputation as a friend of Islamic finance and entice an infrastructure investment spree by devout Islamic countries, particularly in the Gulf. With me to discuss Islamic bonds and the UK's plans is Neil Miller, Global Head of Islamic Finance at Linklaters, and a veteran of the industry. Neil, thank you so much for being here today.
Robin, thanks for inviting me.
If we bring up our first chart, we can see here the volume of Islamic bond sales. And clearly, market grew from virtually nowhere a decade ago to now being, several $100 billion. What's behind this growth?
Well, I think the growth is really triggered by the desire in certain parts of the world, the Muslim world, GCC and Malaysia, to really bolster the Islamic financial approach to finance. And increasingly we find that the capital market Sukuk instrument is something that is needed by Islamic banks to actually help them manage their liquidity. And in the longer term, it's going to help the industry create long-term pension products and investment products that will be attractive to the Muslim investor.
The UK is now planning to issue its first Islamic bond, but they've been planning this for a while. What happened last time?
Well, that's a very good question, Robin, and I was heavily involved in that last time around. And I think it's fair to say that those of us in the industry were somewhat disappointed because the former administration had spent a huge amount of time building the Islamic finance industry, and we were very keen and optimistic about the issuance of a Sukuk. But in the end, the decision was taken not to issue for value for money reasons, and that decision came just before the financial crisis. And I think really once that had been made, the financial crisis took over and Islamic finance was less of a priority for the remaining period of the former administration and obviously for the new coalition.
But if the value for money argument still holds to a certain extent, that they are more expensive to structure, and the UK has a vibrant gilt market it can borrow from anyway, why is the UK government now reviving these plans?
Well, I think that the value for money argument was something that those of us in the industry were always unclear about, because there are sort of a few incremental costs. But the industry has developed, the structuring has become easier, and what we've been saying as an industry to government is you have created an environment in which we now have 6 domestic Islamic financial institutions. And post the global financial crisis with the Basel regulatory changes, these institutions haven't got access to high quality liquid assets in the form of treasury instruments. At the moment, the 6 banks in the UK can only fulfill their regulatory capital requirements by buying a dollar denominated instrument issued by the Islamic Development Bank. So a government instrument issued in sterling in the UK would really enable those institutions to manage their regulatory capital constraints more effectively.
If we bring up our second chart here, we've just got a chart of the yield for Islamic bonds. We've seen it fall dramatically down towards 2013, then since then we've had a bit of a sell-off in emerging markets. Lots of these are emerging market instruments. But do you think the UK will actually be able to, given that this demand for a highly rated Islamic bond, do you think they might actually enjoy a bit of a borrowing premium there, that they might actually pay less to borrow because they're doing it Islamically?
I think there's a real opportunity. It's true that slide indicates that when these instruments were first structured, they were more expensive, but we have seen with the increased demand and the increased volume of issuance that the pricing has come down, and I think that the government could be a beneficiary of that. That sort of pricing strategy is something for the economists to look at more closely than the lawyers. My starting point is that Islamic finance has to be on a pari passu equivalent basis with conventional instruments to remove any risk of arbitrage. But there is no doubt that the Islamic finance investment community is very excited by this issue, and I think there will be no difficulty in the issue getting away.
Well, Neil, thank you so much for being here today. Well, the Islamic investment community is clearly excited about the prospects for a UK Sukuk, but it remains to be seen whether it will trigger this wave of investment that the UK government clearly hopes it will.